All right, guys, one more day left this week at non-farm payrolls right around the corner. It's Thursday evening. It's May 6, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Friday, but non-farm Fridays trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the S&P, the Nasdaq, and the gold on our radar for tomorrow. Speaking of tomorrow, got the granddaddy of all the news events tomorrow morning, the biggest news of the month of May, tomorrow morning bright and early. So I want to make sure you know what to expect and how to stay out of trouble tomorrow around that news. We've also got some nice big bull markets on our hands right now. S&P bullish. Nasdaq looks bullish, but I'm not quite convinced yet on the NQ. And boy, what a ripper today on that gold. So lots of buyers in the markets right now. I'd love to buy some pullbacks for tomorrow, but I can definitely see some traps that are setting up here, especially in the Nasdaq and the gold ahead of that non-farm payrolls tomorrow morning. By the end of this video tonight, you'll know all my favorite setups and all the tricks I'm trying to avoid, those traps I'm trying to avoid for tomorrow's Friday's trading session. But before we jump in, though, and get our hands dirty on this video tonight, I just want to make sure I remind you guys, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening, my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel, and when you do, hit the little bell icon so you always get notified every time I publish something new. And if you guys have any questions for me, you can always drop those questions in the comments section. I always appreciate you guys dropping those comments in. I'd love to answer all your questions. And if you tune in every evening, if you enjoy this video as much as I enjoy making it, do me a big favor tonight. Hit that like button, that thumbs up button if you guys enjoy this content on this video. But again, make sure you subscribe. That way you always get notified when I publish my next video, and drop those questions if you guys got them along the way. In the meantime, though, let's get this video going. Friday is right around the corner. Not just any Friday, right? Non-farm Friday, the first Friday of the month, the big kahuna, right? The big news of the month of May is right around the corner here. So what do we got in our charts here for this evening? Everything's bullish, right? S&P's bullish. Nasdaq, I don't know. If you look just at the S&P and the Nasdaq right now, you might think these are two of the same markets, but they definitely are not. The S&P is a lot more bullish than the Nasdaq, and I'll show you why that is when we jump into these charts tonight. Gold, of course, very, very bullish, right, into that trading range. I'd like to buy a dip on the S&P, would love to buy a dip on the S&P, get all-time highs on our radar for tomorrow. And I got to say, I'm leaning towards the sell side here on the Nasdaq. I know it seems crazy right now, but I'll go into more detail once we get our feet wet on this video tonight. I'd like to get a short on the Nasdaq. I am obviously open-minded to the buy side here. We got some key levels overhead there at 13,700, but I got a couple of reasons why I'm looking for that short side on the Nasdaq for tomorrow. And boy, there's no way I want to sell the gold right now. At least not yet, right? It could always change direction tomorrow. Got that big news tomorrow. It's pretty straightforward on gold, right? Bull market into a trading range. I have a couple really key levels here, and depending on kind of how deep the pullback is, we'll talk about my favorite entry techniques and entry triggers depending on when we get that pullback. We'll likely get the pullback at some point tomorrow. The question is, does it happen early or late in the day tomorrow? That will kind of determine what type of entry triggers we'll use on that. So not to worry, though. We'll go over all the detail tonight on this video. Now, before we jump into charts, though, let's make sure we're all on the same page for tomorrow. Tomorrow, of course, is non-farm Friday. Now, there's a couple wrinkles you want to be aware of for tomorrow. First things first, employment number comes out at 8:30 Eastern time. Now, what that means is if you're trading overnight, you got to be careful. A lot of times ahead of the non-farm payroll number, sometimes the markets are great overnight, sometimes they're not. Sometimes they're very slow and sluggish. Remember, being a successful trader or trading in general is a lot like riding a bicycle. It works better when it's moving, right? It's easier to ride a bicycle when the bicycle is moving. It's a lot easier to get consistent results in the markets when the markets are moving. So if we're getting some good personality overnight, by all means, you can trade that. Just don't force trades in that kind of, Asian into London to pre-market session, because a lot of times the markets are kind of paralyzed as they are waiting to see what they're going to get out of that employment number. Again, this employment number is the biggest report we get. Besides the FOMC announcement 8 times a year, this is, I said, right, this is kind of the granddaddy of all of the news events that we do see each month, right? First Friday of every month. So first thing is be very careful. Don't force trades overnight unless we're getting some good personality, right? And so hopefully we'll get some good personality. But if we don't, you know what's happening as far as the number goes, or as far as what people are waiting on for tomorrow. Now, after the news comes out tomorrow morning, 8:30 Eastern time, they are expecting a very good number. In fact, they're floating numbers above 1 million new jobs added in the month of May, right? This employment number on Friday morning is actually reporting all of the new jobs, right? All the non-farm jobs that happened in the month of April, right? They're reporting it the first Friday of May. We already saw a good rough estimate from the ADP employment report on Wednesday. So people are pretty much banking on a pretty big number here tomorrow. What you want to be looking for tomorrow is, in the wake of that number, do we beat that number? In other words, a blowout like 1.1, 1.2, 1.3 million jobs. That seems a bit crazy, but as I mentioned last night, everything's crazy right now because we've been locked down, right? And all this stimulus coming in. I think the big number we want to see tomorrow is a big miss. That's what's really going to give us the best volatility and the best opportunities. Now, no matter what we get, right? If the number comes out within expectations, if it comes out higher or lower, the most important thing you want to remember is be careful those 5 or 10 minutes after the news comes out. We are not trading the news tomorrow in our trade room. We will trade the reaction to the news, but usually it takes about 10, almost 15 minutes sometimes for the dust to settle, update our charts. Sometimes that news report comes out and it's just wild. And we have to go in and kind of update our ranges, update our channels. So obviously, I'll do my best tonight to give you some ideas for tomorrow. But tomorrow morning, we may have to kind of update this stuff on the fly after that number comes out. So just be careful that 5 or 10 minutes afterwards. We'll update our charts, we'll update our strategy possibly, and we'll trade the reaction together tomorrow morning in the trade room. And also, too, the third thing that you want to kind of remember about tomorrow is it's a Friday, right? So you're probably not going to get a full day trading session on a Friday morning. You got to really have a good reason to be trading after 11 o'clock Eastern time. So tomorrow, definitely do not hit that snooze button tomorrow morning. You want to get to that desk early. Again, we'll see how the personality feels overnight. We've really got the whole world waiting tomorrow to see what that employment number comes out, that non-farm number comes out at 8:30 Eastern time. Give it a few minutes after the news comes out, let the dust settle, update our charts, and of course, right, we'll trade the reaction together tomorrow morning in the trade room. We're not going to be there all day though, right? You're not going to be there all day. Usually by about 10:45 on a Friday morning, things start to slow down. Oh, one more thing too. Non-farm Fridays and really overall Fridays are great for getting into positions early in the morning and leaving a runner, because I'm not sure if you guys have noticed this, but Fridays do tend to have that kind of melt up or melt down, right? Market personality. So I always tell my clients, try to get into something early in the morning. If we can kind of get some of those big targets out there, sometimes you get lucky and you can earn your whole month's paycheck in just one kind of letting it run on a late Friday afternoon. Again, not looking to enter trades on Friday afternoon, but if we can get into something, a lot of times a Friday will really on low volume start to really melt up, right? Or melt down, and you oftentimes do get a chance to grab some really nice runners late in the day on a Friday. But again, make sure you're careful getting into new positions after 11 o'clock Eastern time. So again, careful overnight. Keep an eye on the price action after the news comes out, early in, early out, and leave those runners as we try to see if we can get some big moves on Friday afternoon. Now, of course, tomorrow morning and every morning, Monday through Friday, we're going to be getting together every morning in our trade room. I would love to have you there, right there with us, trading the reaction to this employment number tomorrow morning. We open up at 8 o'clock Eastern time. I'll put all of the membership links you guys need, the description of the YouTube video, so make sure you come out and get registered, and I'll see you guys tomorrow morning at the opening bell. Let's jump back into our charts, though, now. Charts are all ready. S&P, Nasdaq, gold. It is so great to have you here with me here tonight as well. Everything looks pretty bullish except that Nasdaq. The Nasdaq's the oddball out, and we'll talk about that here in a moment. Let's jump first, though, into the S&P 500. S&P, of course, spent most of its day today kind of chopping around right inside that range. The buyers bought the low, the sellers sold the high. And for whatever reason, right, it could be the anticipation of that non-farm payroll number. We do get a very significant bull breakout to finish off the trading session. Now, one of the big significant differences between the S&P and the Nasdaq is the S&P was bullish before it went sideways this last day and a half. This gives the buyers a lot of control, a lot of momentum. The wind is at the back of the bulls right now as they try to make that run up to, dare I say, those all-time highs and some levels of interest for targets tomorrow, 42.14, 42.23, and of course, if we keep going, right, possibly a big round number at 4,300. All-time highs, though, are definitely on our radar, and they are well within striking distance here for the buyers. Again, the key takeaway on this S&P is that, yes, it was a range, but it was a bull market into a range. So when I see the market go below the range and then spit out the other end, there's very little I want to do as far as selling, right? The only selling I'm doing up here is taking my profit on any of the entries, right, coming off those lows. Buyers have a lot of momentum right now, and because of that, I'd like to be a buyer, right? I want to be a buyer, and I want to buy at support levels. There's a couple support levels I have my eyes on right now. The big one is this prior swing high. This would kind of be what I would hope I could get my hands on for tomorrow. Now, I'll be honest, with all this momentum and with kind of the writing on the wall for that all-time high, I can imagine this would be a bunch of FOMO up here, right? People who don't want to miss out on the move. So I may not get that pullback back into that 41.80 area like I'd like for tomorrow, but that would be kind of my dream come true pullback here for. That is a great area of support for tomorrow. I've also, you'll notice here too, got a couple channels, right? I've got the kind of the obvious channel. This one's kind of the more obvious one, right? That's going to be an area of support I'd like to use for tomorrow. And then you can see it lines up right along with that prior swing. I also, of course, you might notice that I have this steeper channel. And this one's a little more difficult to see. If I zoom in a bit closer on this, what I'm doing here is I'm drawing that channel actually off of these highs, right? As the market rolls and kind of grinds higher, right? I'm drawing it off of those highs and bringing it down to that low. And that sets up for some trap entries off the low of that steeper channel. I really like that spot as well. So that 41.85 level, that looks pretty good. Again, that prior swing high level, low that channel, all of these are really very enticing levels of support here for us as we go. So knowing kind of what we're looking at, knowing the personality of this market right now, right? What would my favorite trades be on the S&P for tomorrow? Again, they're all going to be bullish. We'll talk about how to sell this market in a second. I'll cover that in a moment. But right now, though, my three kind of favorite trades for tomorrow, one of them is going to be a two-try trap, getting underneath that low and a nice strong signal, again, off of this new channel, right? Mark the high, mark the low. A lot of momentum, a lot of FOMO, right? That'd be a great entry setup. Again, we call these two-try traps, right? Basically, bears try once, bears try twice, 1, 2, trap low off the low of a new channel. That'd be a first-time pullback, very reliable entry, and with all this momentum, definitely something I'm looking for here on my radar. Now, we may not get that trap. The market may sink back down into these areas of support down here. If we take away, just real quickly, if we take away that channel, if the market now pulls back deeper and doesn't give me that entry, the next one I'm looking for now is going to be your classic failure into pullback combination coming off of that low. Now, like I said earlier, this would kind of be the best possible scenario here. I'm not going to look for traps on a deep pullback like that, but I will definitely look for those sellers to come in and try to get short on this, right? If we can get that deep pullback, hopefully those bears will try to sell back into this range below us here. We can catch them on the wrong side of the market. Again, lots of bullishness right now. Big, strong push higher. The odds are very good we end up right back up at that high again here. So again, I'm looking for a seller failure pattern. And then don't forget, oftentimes as it pops back above the moving average, you can grab that pullback combination. And if we're really, really lucky, oftentimes that will go up and you'll be able to get one more before we retest those highs for a trap, right? So again, failure pattern, pullback pattern, trap pattern. And remember too, mark up that high, mark up that low, find those little small channels there. We'll obviously find that together tomorrow morning in our trade room. That's the second kind of favorite. In this case, it's more than one trade, right? It'll be a failure trade, a pullback, and a trap entry, right, coming off of that low. That's my second favorite setup for tomorrow. And again, if the trading gods are listening up there right now, that's the one I want, right? That's the one I want. That is a lot more profit potential there as we load the boat on that deep pullback. And of course, last but not least, right, kind of the third and probably the least desirable entry is going to be if the price goes higher, right? If price does go higher here, what's my problem? What's my concern? We always talk about, right, there are two things I'm always asking you guys in the trade room. How's my location and how's my MOMO, right? How's my momentum, I should say, right? Those are the two kind of, two checks and balances you want to think about before you take a trade. So how's my location right now? Location is not that great, right? As I go higher here, I'm running right into all-time highs. It's not a great location. It's a great momentum though, right? We get a lot of momentum. So when momentum is good, but location isn't that great, my go-to entry pattern are always going to be traps, right? So as we go, watch this market to keep going higher, watch that shallow pullback, that higher high in price, and that trap, right? That trap off the low. And those traps, of course, don't forget, right? Don't forget, you can always try to grab that trend line there, trend line there. We don't always get them, right? But if I can combine a channel high, channel low, and grab that trap off the low of that channel, that's always going to help out to increase your odds. But that is, again, as we go higher here, to avoid buying too high, my go-to entry is always going to be a trap setup. And again, don't forget, all-time highs, right? All-time highs on our radar. And of course, we got those, right, those projections up top there, 42.14 and 42.23 and a quarter. Now, last but not least here, how do we sell this market? How could I sell it? It's you could easily make a case for it. There's a big range down here. Right, it's a big old range down there. So how do I sell this market? I can think of two reliable sell setups that I can look for tomorrow. You ready? The first one is going to be the one that's almost bulletproof, which is a 1, 2, 3 reversal. Now remember, we're not going to sell the first pullback off the moving average. But if the sellers can hold that pullback, if they can get this thing under the EMA, hold it and go, now we have a turn in momentum and we can mark up that low, we can mark up that high, and we can sell now off the high of that channel, right? These are called 1, 2, 3 reversals, right? 1, 2, 3 reversal into a hidden channel pullback. What makes this pattern so reliable and so consistent is the fact there's a ton of FOMO after we turn. Everybody wants in on that one, right? Professionals aren't going to trust the first one because, again, the first one is most likely going to fail and spit back up to retest those highs. But once we get that reversal, that first test is always the best test, as we always say on this video. And guys, don't forget, this is a 7,000 tick chart right now on the S&P. I'm not going to use the 7,000 tick chart to trigger the entries off the top of that channel. I'll drill down to a much faster time frame and look for things like bull traps and buyer failure entries off of that high. Now, unfortunately, I can't go over all the details of how to use a faster time frame in combination with the entry triggers, but I would love to go into more detail on that in our free trading class. If you want to get more deeper dive into that stuff, if you want to learn my favorite entry techniques, entry patterns, how we use faster time frames to trigger the actual entries, don't forget, grab the free trading course on our website. I'll put a little link up there for you guys in the upper right-hand corner. As part of that free course, you'll learn all my favorite entry setups. You'll learn how we trade range-bound markets, how we trade trending markets, and by the time you're done with that free trading course, you will be head and shoulders ahead of everybody else on YouTube. Trust me. Everybody loves that free course. Grab that link in the upper right-hand corner. Grab the free course and get a deeper dive into all these trade setups. You'll see lots of examples of our favorite futures markets, everything covered in that free trading class. Now, one more potential short setup, and then we'll finish this thing up here for the S&P. It will be a crown reversal, right? A crown reversal would be the next possible, right, short here. Now, we're almost, right, at this measured move, which means we're almost at a point where we can start looking for a major reversal. Reversals are tough because you got to make sure you stay patient for them. The bigger the move, the wider the reversal pattern that you're going to need. The buyers have control. So the first thing is I want these buyers trying once, I want them trying twice, and I always like to look for that trap above that high. Now remember, you can increase your odds of success by finding that low, finding that high, and using the combination of that trap high along with that, again, kind of that new channel as we come down. Remember, this type of pattern, though, is not going to set up in a few minutes. It'll take a half an hour, 45 minutes. Remember, the rule of thumb on these reversals is the bigger the move, the bigger the reversal pattern needs to be, right? So I'm not trying to go up and look for 1, 2, and then to sell that sucker back down. Way too early. You got to give the buyers the benefit of the doubt. Let them try it once. Let them try twice, right? And then once we've got those buyers struggling here, we can then look for that short coming back down in. And guys, sometimes these, right? Sometimes they'll go deeper, right? They'll go 1, they'll go 2, so sometimes they will go deeper here and you can grab them from there. We'll obviously kind of play it by ear tomorrow and see how this thing sets up tomorrow morning as it starts moving in real time. But that's kind of the reversal setup I'm looking for as we go back down into that trading range and possibly all the way back down, right, to retest the lows. Again, I talk a lot more about those specific reversal patterns and all my favorite entry techniques. I cover all that stuff in the free course. So make sure you grab that. You'll get a much more in-depth review of actually the entry triggers we'll use tomorrow morning in our trade room. Last but not least, don't forget, if we do go sideways, right, if we do go sideways here at some point tomorrow, remember, find those levels of support below the range and combine those levels with failure patterns, right? So if we do end up going sideways at some point tomorrow, remember, pick those bottoms using failure setups and check out the free trading course for more details on those entry techniques. S&P is looking pretty good. Will we run these all-time highs tomorrow? Will we reverse back into that range? We shall see. How about some Nasdaq here? Open the Nasdaq up. Now, again, as I mentioned before, if you look at the chart like this, at first glance, you would say, oh, the S&P and the Nasdaq, they're the same animal, right? Well, they're similar, but they're not exactly the same. And here's the big difference. The Nasdaq had that big move down, right? The Nasdaq had that big move down. S&P didn't have that. Well, it did, but not nearly as drastic. And you could literally look at the Nasdaq right now and say, you know what? This is just one big range. Right? One big range. You got that higher low. You got potentially a lower high. It's very tempting right now to look at this as one big triangle. And of course, a triangle says sell the highs. Okay, so it's very easy to see here that, again, it's a very strong bull move higher here. And you can see they're trying to push higher here as they open up in Asia. But I don't think we're quite there yet. Here, right? The buyers definitely have some strength behind them. But, again, this is not a bull market, the S&P, right? S&P is a bull market into a range. I will feel a whole lot better buying up here on the S&P because it's bullish going into the range. This one is bearish here going into that range. And that range, of course, right? Ranges, of course, will always act like magnets. So what's the plan here? Right, what's the plan right now if the market keeps going higher? How do we sell this thing back down into the trading range? Again, we're definitely bullish in the short term. There's no doubt about that. But it's very concerning, though, being at the highs of a bear range, up on the top of a triangle, up around major areas of resistance with that range weighting down below. So I got a couple of my favorites here for tomorrow. What I would like to do here for tomorrow is get this thing short off the highs with one of those very similar nested failures or nested reversal patterns we talked about on the S&P chart. So for example, let's put this channel back on quickly here. If I put that channel back on, that looks really good. If I was going to be a buyer on this market right now, I would try to buy the low of that channel, right? Very similar to we talked about on the S&P, right? There's a big channel and there's a smaller channel. The smaller channel is probably where most buyers are going to be trying to get in. Now the buyers have a lot of momentum, right? A lot of momentum at the back of the buyers. They're rotating off the low. Again, there's no doubt about the bullishness in this market. The question is have we successfully broken free of this trading range? Because again, you look left, there's a lot of evidence there. There's a big magnet down inside that middle. How do I short this thing? I have to anticipate the buyers buying the pullback and sell into their stop losses. That's the easiest way to make money in a market like this. So if I get it my way tomorrow, I'd like to see us come back, try to buy off of these lows. And again, once I can get those buyers trying a couple times up here, I can look for a trap above that high. You know, trap be great. I don't really need the trap. I can also use that prior swing low, mark up that channel, right, and look for that short going back down into that trading range. That would be kind of my favorite possible entry setup here for tomorrow. My second potential short trade would be if the market was to, let's say, for example, collapse back down into this trading range, right? If we're to collapse back down into that trading range, let me get this thing over a little bit for us. Let's say, for example, right, we pull back and we end up simply collapsing back down into that range now. Now this becomes a bear market into a trading range. What do we do in a bear bias environment with a range below us? Well, the range acts like a magnet. What do? We find levels of resistance above the range and we combine those areas with what we call failure patterns, right? We wait for the price to poke its head above. We wait for buyers to get caught on the wrong side of the moving average. We use that range as a magnet to sell back down into that trading range. That would be the second of my favorite setups as we go. My third favorite is definitely going to be a bull breakout, right? A bull breakout. If they can push this thing a little bit higher here for me, I'd be more than happy to start buying this market. But right now, again, it's just a little bit too convincing here at where we are right now. And again, you look left, it's difficult to get excited about buying up here. Now, you can definitely see there's a big top up there, right? At that 65.5 area on the Nasdaq. If we do get this market running higher, it'll be a lot like on the S&P, where as we go higher here, I'll be looking for that shallow pullback, that higher high in price, and that trap off that low. The reason why you want that trap is because of, again, how's momentum? Momentum's great at that point, but how's location? Not that great. To deal with the bad location, that's exactly where you look for those trap patterns. Again, strong move up, shallow pullback, higher high in price, traps, baby, right? Traps. And of course, right, it'd be great to combine that trap off like one of these prior swings, right? That would be even better if you could make that work for tomorrow. That would be my third favorite setup as we're going higher. Remember, the buyers here, the buyers have this big level overhead here. And if they can crack through this 13,700, this could get really good for tomorrow, right? This area right here, this 13,700, if you look left here, that's the low. Yeah, that's a big major low. So that will be an area of resistance. But I'll tell you, if these buyers, if they can get their hooks into this thing and go, we've got a lot of open space once we get through that. It does seem a bit unrealistic, right, to expect to go all the way back to that weekend gap tomorrow. But, you know, hey, that's where the week began, right? The week began right up here, right? That's exactly where we started off the week this week. You have to think, if the number comes out good tomorrow, if something really lights this market on fire here, this is one of those scenarios where leaving a runner on a Friday afternoon, this is one of those melt-up environments where you could easily see a short squeeze, a short covering rally. These are the scenarios where on a Friday afternoon, low volume, this thing can just flutter, right? It keep going for pretty much to the close there, like we saw, 2 Fridays ago when everybody had that melt up, right, a few Fridays ago. So that's some food for thought. Again, right now, I'm not quite convinced on the buy side just yet. I would rather look for the short going back down into this trading range. Again, anticipate where these buyers are coming in, right? Let them try once, let them try twice, grab that hidden channel, right? If you get lucky, grab that trap, right? That trap. And then don't forget too, as it goes lower, right? If it does make that drop lower, we can sell off that 1-2 failure. And then number two, obvious too, grab that channel low, grab that channel high. And if we can get enough momentum rolling lower here, right, that would be that 1, 2, 3 reversal, right, into that hidden channel pullback. And again, right, this is a 4,000 tick chart, right? I'm not entering the trade on the 4,000 tick chart. I'm going to drill down to a much faster time frame. And the most common entry triggers we'll use off the top of that channel are bull traps, buyer failures. They oftentimes will produce, right, those nice runs back down to that low. And again, I'm not going to go over all the details of these specific entry techniques in this video. This video is already long enough. But if you do want to learn my favorite entry patterns, how we actually find those entry triggers, right, you can gladly grab that free course linked up in the upper right-hand corner. Everybody loves that free course. It could give you guys a much better, deeper dive into how we apply these setups to our favorite futures markets. So make sure you grab that link up there in the upper right-hand corner. That pretty much covers it, I guess. Just remember, too, tomorrow morning, big news, 8:30 Eastern time. If we do go into a range up, you know what I mean? If we do end up here into a range, don't go buying high. Find those levels of support. Use those failure patterns, right, to buy underneath that trading range if we do go sideways at some point tomorrow morning. Nasdaq, I'm actually quite interested to see what's going to happen in the NQ here for tomorrow. The S&P is clearly bullish. The Nasdaq is kind of a wannabe bull market right now. We'll see if it can get its job done going higher tomorrow, or if the bears keep their hooks in this thing and sell the sucker back down to those lows. Next up here, and last but not least tonight, on the gold. What a ripper on the gold today. My goodness. Gold definitely, of course, catching a bid, as they say. And we see basically what is a spike in range on the gold, right? We spend the first part of the morning, right, bull market up into that trading range. Buyers are buying low. And I'm not sure anybody saw this big breakout coming, but obviously that big breakout now runs this thing up the flagpole and pretty much finishes the day here inside of a range. It's not a big surprise, right? When a market moves that quickly and that much, it's, buyers right now are probably not going to take their profit. Buyers will try to hold on to their positions right now to see if it keeps going, and nobody in their right mind wants to sell this thing right now, which is oftentimes what leads to that market treading water. It's a very strong bull market. There's a very good chance whenever we see this much strength in one direction, there was literally no deep pullback. There was no trap on the way up. Any buying opportunity right now, any pullback will likely be seen as a buying opportunity. And the key is finding levels of support and combining those levels of support with one of our entry triggers. Now, I mentioned this earlier. If there's with the big news tomorrow morning at 8:30, if there's one market that will be the most difficult around the news, it's this one right here. Gold is always kind of the fussiest around the FOMC announcements, the non-farm payrolls like tomorrow. So just be aware of that, right? You got to be careful. Again, if we're not moving very much, and again, sometimes you'll see gold move very well overnight ahead of that number tomorrow morning. Sometimes it doesn't. So just don't force it. And, again, tomorrow we'll wait and see the number come out, and we'll adjust our charts and go from there. Gold definitely has potential to be a little bit wacky, right? A little bit fussy into that news tomorrow, but it's pretty simple, pretty straightforward. We're bullish into a trading range right now. I'd like to buy a pullback, right? I'm going to buy at a support level. So it really all depends on what type of pullback that we get. That's pretty much what the deal is right now. Do we pull back early? Do we pull back late? Do we see a simple pullback, a complex pullback? Let's talk about this real quickly here, though. I'm measuring the size of this first leg off the low, and that's what's giving me kind of this length of this measured move right there. I don't know how far this thing will pull back. What I do know, though, is the most reliable target, right? It could be that one, it could be that one, it could be that one, right? So I don't really know exactly how far it'll pull back, but I do have a good idea of how big that target will be on the rebound going higher. Ready to rock and roll on this now? Okay, so three of my favorite trades on the gold for tomorrow, knowing that we are very bullish, knowing that there's a big bullseye right on that high, right? Now, First one is what I really hope we get for tomorrow would actually not be a pullback right away. It'd be a higher high and a trap low. What would really make me happy tomorrow is if we got this market to open up, here, right, in the overnight, pop up, take out those highs, and then you guessed it, give me that trap right off the low of that channel. That would be my favorite entry technique here for tomorrow. And the reason why I like that one is because we haven't seen any traps yet. There's been 0 traps, right? None of these pulled back below prior swings until we were way, way late. So again, if I can get this thing to go higher here with that higher high, mark that right, mark that low, get that trap right off the low of that channel, really specifically down underneath, right, some of these lows here. That's where a lot of buyers are going to be watching closely here for tomorrow. One of the big reasons why I hope we get that higher high and that trap low is because of the second favorite entry technique going lower would be a pullback. Now, here's the problem. If we pull back right now, there's going to be a trend line coming down overhead. It's one of the big reasons why I kind of hope we get a higher high overnight. It'll clear that trend line out of our system. The problem we have now is, well, think about it. I've got momentum and I got location. How are they? Oh, momentum's great. It will take it will take a very strong move down to stall this momentum out at this point. Momentum's great. It's location that is the problem, right? That trend line comes in. All right. Now, let's see if you're paying attention tonight. I've got one favorite entry setup, entry pattern, entry technique that I like to use whenever I'm concerned about what? Buying high or buying into resistance. What is it? It's a trap setup, right? Absolutely. So if we do see this thing start to pull back here right now, that trend line comes down. Again, get me into these buy zones down here. And if I get those buy zones now, what's going to happen is the bears are going to see that trend line as like a bulletproof vest, right? It's like armor for those bears. And so they're going to be a lot more aggressive, looking for what will basically be a 1 try, 2 try, and rolling over, right? The bears will look at that and say, oh, nice, I can sell into that. What I have to do is, and this is very, very important, I have to anticipate those bears are going to be coming in at that trend line, and I'm going to want to use a trap entry to make sure that when I get in, I can get my profit target, my 1-to-1 target, before those bears have a chance to spoil my day, right? That's what you want to think about in this situation. You want to anticipate that bears are going to look at this. They're going to see this thing go 1 try, 2 try, and they're going to try to short that thing right off of that high there. I want to make sure I'm using a trap entry to get me in. So by the time those bears come in, I'm already well in the green on that position. I can tighten up my stop, and hopefully those bears fail and rip higher, right? That's kind of the idea behind that trap entry, right? Does that make sense, right? Give me a yes, give me a thumbs up in the comment section. Let me know if that makes sense, right? You have to anticipate those bears coming in and make sure you're already well in the green before those bears come in. That way you can quickly tighten up that stop, and if they do run this thing lower, there's no harm done, right? But if they don't, now you're in a great spot, buying nice and low and a short squeeze, ripping higher there, running little stops above those highs here. That's my second favorite trade setup. Again, it's a trap entry. I'm worried about that falling resistance. Now, the deeper pullback. The deeper pullback is definitely possible, and it could go, honestly, as low as this 1804 area. I'm not sure if you recall this, but there was a pendulum swing level, right, kind of 1804, 1803 there from earlier on in the month. I think it was earlier this week, I think it was. But the bottom line, though, is we may see this thing really, really pull back. Right? You know, a big move up like this, it could easily, with news tomorrow morning, easy come, easy go. A market that can move this quickly higher can easily pull back 60, 70% to attract buyers before it runs back up. What's my problem, though, in a deep pullback? What's my problem? Remember, two questions. Location. Come on, Joe. Spell it correctly, man. Location and momentum, right? Okay. Location. How's location? Fantastic, right? That's a nice deep pullback. Got a nice risk small to earn large, right? Beautiful opportunity, great location. What's the problem though? Momentum. right? That deep pullback says what? When this thing goes lower, all those bears are going to go, see, I told you, we're going back down to 1,800. We're going back into that range, right? The bears are going to come in and they're going to attack, right? They're going to draw that channel, find that channel. And again, they look at this and go, okay, I can sell into that right now. Okay, that's, again, put yourself in the shoes of those sellers. So if I do that, if I do get that deep pullback, right, kind of inside this buy zone, that's why I've got them broken up into two of them. If I get down to the secondary buy zone now momentum is a concern, and now what I want to do is let those bears, let them dig their own grave there, right? Let them try once, let them try twice. Once we've got those bears committed here, and keep in mind too, this may be the pullback after non-farm payrolls tomorrow, right? This pullback may be, these big red candles after that non-farm payroll report comes out tomorrow. But by 8:45, 8:50, the bears are tried once, the bears are tried twice. We're drawing that trend line, find that channel. Maybe we get lucky with a trap low, right? Remember, there's a lot of different ways you can enter this trade, right? Trap low, channel buy, stop buy, right? You're basically buying into those stop losses with what is basically a failure pattern, right? That's all it is, right? It's a failure pattern, except it's a failure inside of a failure, right? I call them nested failures to describe the idea. There's two tries there for those bears. And then don't forget, you can oftentimes grab that new channel off that high, off that low, and grab that first pullback, right? So it's kind of like a failure into pullback combination as we make that run back up to retest those highs. That would be my third favorite setup here on the gold, right? So do we push higher? Do we get a shallow pullback? Do we see a deep pullback? Here are some other variations too you want to keep in mind for tomorrow. If the market runs, right? If it runs higher here, we've got this 1831.6. I've got, 1840. This is a huge range. This 1840, 1860, this is a big range from, like, I want to say early or March, right? It's if you look at like a 4-hour chart, whatever, you'll see there's a big range up there. That is where this market wants to go. So, hey, it's gold, right? They're printing money. They're spraying stimulus out there. It's obvious gold is going to react bullishly to something like that. But of course, I can't buy right now. I want to wait for that strong move up, that shallow pullback, that higher high in price, and that trap low. That would always going to be my favorite entry trigger on a breakout like that. Or we may get just a 1, 2, 3 breakout pattern, right? It may just pop up, hold the pullback, jump. If that happens, mark the high, mark the low, and we want that first test, right? We want that first test. And again, this is a 1500 tick chart. I won't be finding the entries on these first tests on this 1500 tick chart, right? We'll drill down to a much faster time frame, looking for bear traps, looking for failure setups, and you'll get a much more deeper dive into all the exact entry patterns and entry techniques in that free course, right? Grab that little button up there in the upper right-hand corner. So keep your eyes on that as we go. And then what do you think? Can I short this thing right now? So the S&P was an example, right? The S&P was at a big measured move, which allows me, the Nasdaq, excuse me. The S&P was at a major measured move, right? I can rationalize a reversal on the S&P, right? Kind of like a nested failure like the Nasdaq. Gold is not there right now. We are pretty much in nowhere's land right now on the gold, right? We're well above these highs. This is definitely going to be difficult to pick a top on this because of all of that momentum. So really the most reliable, the most dependable way to short this thing tomorrow is to wait for the 1, 2, 3 reversal pattern, right? Wait for that pullback. Wait for those bears to come in and get short off the moving average. If they can give this a 1, 2 go, remember, it's not the strength of the first pullback that matters. It's the strength off the moving average that matters. Once I got that 1, 2, 3, I can then mark up that low. I can mark up that high, and I can find my entries. Again, first test is always the best test, right? We'll drill down to a faster time frame. We'll find those bull trap entries, those buyer failure entries. A lot of times, it'll go failure into pullback, into strength move going down. You'll learn more about those entry techniques and that terminology in the free trading course. But that's the idea here, right, on the short side. Yes, there's possibility here. The buyers try once, buyers try twice. There is that possibility, as mentioned earlier, there is that possibility here, but it's not a very reliable trade because it's so bullish right now. And it's not like we're sitting at some major top right now. You know what I mean? It's not like we're sitting at some major, resistance area overhead. We're kind of in nowhere's land right now, which makes me very hesitant to trade that reversal. However, if it does reverse, no problem, right? If it does collapse off that high, great. Mark up that low, mark up that high, and I'll gladly grab that first pullback, right, to ride it back down to that trading range. I'll skip the first one, right? Not the most reliable trade in the world, but I'll gladly want that first pullback, and we'll get aggressive getting into it tomorrow morning in our trade room. So now you've got a pretty good idea of my favorite trades for tomorrow. Now all we need is a little more time, a little more candlesticks, and we can, again, careful overnight. Expect this market to be a little bit quiet overnight, but hey, if we get some good personality, you can definitely trade it. And don't forget, tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern time, I would love to see you there, right there with us, trading this stuff together. I'll put all of the membership information, all the links you guys need to join the free course, and the members trade room. I'll put all that information for you guys right in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you right below me tonight on the trading blog. Whatever you do, though, don't be a stranger. If you have any questions, don't be afraid to call the office. Don't let my ugly mug scare you away there. Call that toll-free phone number if you guys have any questions. Would love to answer all your questions and get you ready for tomorrow. We got live chat on the left, live chat on the right, and as always, you can drop those questions in the comment section below. I hope by now you guys have hit the thumbs up button, the like button. I hope you subscribed to our YouTube channel, and don't be afraid to forward this YouTube channel to a friend of yours. Everybody can benefit from this nightly newsletter. Tomorrow morning, be careful before and directly after that news, and don't forget to leave that runner possibility right on Friday afternoons. Be careful out there, but as always, right, follow the plan, and I'll see you guys tomorrow morning at the opening bell, 8 o'clock Eastern time. If I don't see you tomorrow morning, I'll see you guys on Monday evening. We don't do the newsletter on Friday evenings. Have a great weekend. If I don't see you guys tomorrow morning at the opening bell, I'll be back on Monday, and we'll keep doing this Monday through Friday next week as well. As always, my name is Joseph. Thank you so much for tuning in. Be well out there. Be nice to each other, will you? Stay healthy, stay happy, and we'll see you guys next time. Adios, amigos. Bye-bye for now.